Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
He is wonderful, venerable, extinguished up in Portland, Maine. Gerard Cassidy joins us, head of U.S. Bank Strategy for all of RBC Capital Markets. Gerard, I got to start with Portland first. You had some very difficult fires there in the last couple of weeks, didn't you? How's Portland doing after, I think, some difficult fires on the docks?
Tom, I'm looking at them from my window, and you're right. We lost, sadly, 4 businesses, but fortunately, nobody was hurt. But they're going to rebuild, and which will be great. But it was a tough time in between Christmas and New Year's, no doubt about it.
Tell me that you didn't lose that lobster shack you sent me to on a summer's day years ago. I mean,
no, that is still there, Tom, and okay. They're waiting for your return.
We'll do that. I can see a remote. I think, Lisa, it says May for us. Gerard Cassidy, you and I have been doing this back to Tucker Anthony and R.L. Day. How are the big banks different from where they were 40 years ago? They just seem so dominant with almost monopsonistic power.
Tom, you summed it up well, because back then, we had 18,000 banks and thrifts when you and I were young men, and today we're down to about 4,300. So the consolidation that was brought on by national interstate banking under the Clinton administration when they signed that law has really led to the consolidation. As a result, what has happened is that the banks have become more efficient, which has led to much better profitability, while at the same time their capital levels are meaningfully higher than they were 20, 30 years ago, and of course, since the financial crisis. So the industry today, third quarter profits, I mean, the FDIC hasn't come out yet, obviously, with fourth quarter numbers, but the industry is at record profitability in the third quarter on an annualized basis. It's doing very well.
We were talking about loan growth earlier this morning with the big 3 banks out today on top of JP Morgan yesterday. And loan growth seems to be driving the business. There's competition heating up for deposits. What does that mean, I'm curious, for the bank consumer? Because we're all bank consumers, right? What does that mean for us as consumers?
Sure. From the loan growth perspective, you're right. When we look at the Friday data, every Friday afternoon, the Federal Reserve releases the H8 data, which is about loan growth for the industry. Coming into 2025, that was showing year-over-year loan growth of about 0 to 1%. Last Friday, that number was 5 to 6%. So coming into 26, loan growth is expected to be much better than last year. On the deposit side, because rates have come down, consumers are receiving lower rates on their savings deposits, money market mutual fund deposits, and certificates of deposit. But that being said, the system is still very flush with deposits, so banks are not really chasing deposits. But if this loan growth comes through, by this time next year, you will see probably better competition on deposits.
Citi's CFO out this morning after earnings, and on the earnings call, surprise, surprise, said they would not support a credit card rate cap. We know that President Trump, affordability is top of mind now with the midterm elections ahead of us, and he wants to cap these rates at 10% for a year. Talk to me about why isn't that a good idea? If it's just for a year, okay, so there's an end point here. He's not saying forevermore. Couldn't the banks do that without really, hurting profits?
Profitability would be impacted significantly if rates came down for 10% for a year, especially for the credit card lenders. Because when you think about it, let's assume the cost of funding is 3 to 4%. Credit losses for the higher risk credit customers, those are the lower FICO score, they run anywhere from 5 to 7%. So you're losing money without even talking about operating expenses. So what would happen is that originations for the customers that need the money the most or the credit the most, lower FICO score customers. With fees, you have to go to alternatives where the rates are much higher than the banks are charging. So I think it's the second and third derivative that really would impact not just the banks, but consumer spending and the economy.
I mean, I asked Gerard Cassidy about the third derivative of the Boston Red Sox, but he'd hang up on us right now. Gerard, I wanted to do a victory lap for Jane Fraser. You've been way out front on this story. I'm going to shout out to Mike Mayo as well, your partner in crime. Gerard Cassidy, she came in the heart of COVID. Lots of skepticism. Nobody will let me interview her because I'll ask tough questions and all that. Gerard Cassidy, she's borderline executive of the year. What does she need to do to continue the Citigroup ascent?
Tom, it's a very good opening comment on her, and I agree with you. It's going to be an interesting transition for Citi in 2026. The turnaround story that she has orchestrated has gone very well, and she should be congratulated for it. And the stock has reacted accordingly. Now, they're going to be finished once Mexico's consumer banking business is spun off in an IPO sometime early this year. They're going to go from a turnaround story to a growth story, Tom. And this is going to be the interesting part, because they're global corporate banking, payments, investment banking, top of class, very good, where they underpunch, contrary to what you and I remember when we were much younger. U.S. consumer, they don't have a play here. They are so far behind Bank of America and JP Morgan. Their global wealth management business is also undersized. So those two areas will have to be addressed and grown. So I think the heavy lifting starts in a different direction for her, which is they have to grow the bank in these areas, and that will be challenging.
You know, let's take it back decades here. Back when Bucky F. Dent was coaching up in your Maine, Gerard Cassidy. I look at this and I go, I got to ask Gerard, what's a small bank stock right now? Are you doing that anymore? Or is that beneath you? Do you have a small bank you can tell us about?
It's never beneath me, Tom, but what's happened is the small banks have gotten so much larger. And the one that I think is really interesting, and I know it's not $5 billion in assets, but Popular of Puerto Rico, Tom. That is what's going on down there with the onshoring of America, and they still are receiving the benefits from the tragedies of hurricanes and earthquakes. That economy is very healthy, and you're looking at the best positioned bank in Puerto Rico, in Popular.
Gerard Cassidy, thank you so much. Really, really appreciate it this morning. He's with RBC Capital Markets, the dean of all banking coverage in America. Can't say enough about the value of his research over the decades, not only making money, but avoiding losing money as well. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
This is an important interview, folks. We want to inform you of some of the mysteries that are out there. And one of the great mysteries is Europe. Through the American prism, it is challenging, to say the least. It just sometimes doesn't make sense. She is truly expert at this. Nathalie Tocci is professor of practice at John Hopkins. Her shingle is out in Bologna, Italy, and Rome, Italy. Life is tough. And she is absolutely definitive on this. Professor Tocci, thank you so much for joining us today. Here's the American zeitgeist out of your foreign affairs article. Europe has reflexively and consistently adopted a posture of submission. That nails it. What is Macron, to start there, what is Macron getting wrong?
Well, so let me put it in these terms. It's very clear, and I think really rather consistent, the way in which the Trump administration has basically been pursuing what I would define as an imperial vision. Right. So this is about Western Hemisphere. This is about, countering civilizational erasure. This is about the kind of unbridled exercise of kind of raw power. And very clearly, Europe is on that colonial menu. Now, if Europeans react essentially vindicating that vision because they react not simply by flattering Donald Trump, but by self-humiliating themselves, then essentially they are acting as colonies, right? And this is what I mean by saying that they are vindicating precisely the vision that presumably they're trying to counter.
Okay, when you were at Oxford, you read Kissinger cover to cover, 912 pages, Diplomacy. I read it cover to cover. Diplomacy is like the normal world. Can we get back to the normal world, or has President Trump shattered our foreign affairs?
Well, I think that if by normal we mean the old world, the sooner we smell the coffee, the better it is. The old world has gone. The question is whether the new world has to necessarily be one in which it is only the survival of the fittest, only the law of the jungle, or whether perhaps indeed there will inevitably, and always has been and always will be, an exercise of power, but that exercise of power can somehow be constrained by laws and rules and institutions. Now, I think if we want to move closer to that second vision, we need to understand that the way in which laws and norms of institutions worked in the past, that is no longer available. So it's a kind of moment of reinvention. But, as I said, sooner we understand that we cannot save the dead corpse, the earlier and the better we're going to be at essentially redefining anew, which is not simply a law of the jungle.
I want to talk Greenland, Nathalie, because today is a big day. We've got crunch talks going on between J.D. Vance, Marco Rubio, and I guess the folks in Greenland and Denmark. Trump is saying anything less than U.S. control of Greenland is, quote, unacceptable. How do you see this playing out?
Well, this is a really odd kind of, situation here, because Europeans, starting with the Danes themselves and the Greenlanders, are more than happy to talk substance. So does the United States want a greater security presence in Greenland? No problem. Does the United States want greater access to Greenland's natural resources? No problem. But if it is not substance, if it is simply a question of territorial expansion, then that's kind of a conversation killer, right? So I'm not trying to argue here that that dialogue is irrelevant, because I think it's relevant to exposing the imperial nature of this quest. But then the question becomes, how do Europeans react to this? And, there are different kind of options on the menu, right? In terms of, how do you keep your back straight? You can basically, Denmark could invite NATO troops, of course, including the US, but not only the US, from increasing their military presence in Greenland. Europeans could basically say, if the US were to make an aggressive move on Greenland, well, they would be actually welcome to leave other NATO countries too. Thanks very much. There could be contracts being cancelled.
Yeah, but the heart of the matter is, where's the backbone? Professor,
right, exactly.
Where is the backbone? I mean, Stubbs up in Finland has got a border with Russia. He doesn't need any backbone. He's living it in real time. Where is the backbone to tell a unique American foreign policy, hold on a minute, let's discuss this? I don't see it.
Well, I think you're absolutely right. And the question, though, is where's the backbone? I think it's connected to do we actually acknowledge that the old world has gone? Because if what we're simply doing is buying time, hoping to save the old, we're not going to develop that backbone. If you actually look at Europe's material conditions, right, in many respects, actually, we are 30 of the richest countries in the world. We are, of course, dependent on the United States, but aren't Latin American countries in many respects even more dependent on the United States? And yet they have demonstrated, starting with Claudia Sheinbaum's Mexico's president, far greater backbone than Europeans. So I think there's this kind of mental switch that Europeans need to make even before we get to the kind of enabling material conditions to actually act.
I think the greatest thing, we got to go here, Professor, but I think the solution here is to increase the VAT tax lines at Heathrow in CDG. Like if you buy stuff over there, if you extend the VAT tax line so they're not 4 blocks long, but 8 blocks long.
Yeah.
That's how you get backbone.
I think you're onto something.
There you go.
That's how you do it. Nathalie, I'm going to get your Foreign Affairs magazine out on LinkedIn and Twitter. Just a joy to have you on with us. Don't be a stranger. Nathalie Tocci there with the Johns Hopkins University, among others. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
David Seif with us right now with Nomura. Thrilled that he could be with us this morning. You know, he was an undergraduate at MIT. He went far west after MIT, down the river to Charles. We say good morning, Boston, 92.9 FM as well. Did you ever attend a lecture? I've interviewed him twice, maybe 3 times. Robert Solow. Were you ever in class with Solow?
So good morning. So Solow was emeritus, but when I was an undergrad, but he still did a bunch of undergraduate seminars, just sort of ad hoc things. And he was the nicest guy.
Total class act.
Went around the room, got everybody's name, asked what they wanted to talk about. Right. Always focused on undergraduate education till the end.
Total factor productivity, yes. 1956-57. Where in God's name is it now, Professor Seif?
Well, I mean, it seems as though it is rising, according to at least some of the data out there, where we're seeing GDP up, despite the fact that it's really not coming from increased employment. We're not seeing a lot of people losing their jobs, but certainly the labor market has lost momentum. And despite that, we're seeing GDP, every print that we get is a surprise to the upside.
But look at labor share. I mean, you got labor share cratering. It's literally convex and getting worse. You got, the fancy boys and AI and all that. It's almost a 19th century America to me.
It certainly looks like that right now. Now, we certainly don't think that this is going to continue like this for the next quarter or half century as it did back then. So we're not poised for another period of absolutely exceptional growth like we had a century and a half ago. But certainly right now, I mean, looking back at the past 9 months or so, it has been upside surprise after upside surprise. It's not coming from increased employment, and so a lot of it is coming from increased investment and total factor productivity.
Alexis, retail sales in 3 minutes. Why don't you continue with David C?
Yeah, I want to know how the consumer's holding up, because that's a big part of GDP, right? I mean, we've got the president now saying, we're going to get 5% GDP. No, but that might be a little optimistic. But where are you on the consumer continuing to be the pillar of the economy? Because they were, and very resilient, have been through COVID, through higher interest rates, through everything.
Consumer was remarkably resilient during COVID, especially or largely because of the amount of stimulus that's there. Right now, we look at the economy. Consumers going to remain 65 to 70% of it. And that does not seem like it's something that's going to change. However, when we look at where the marginal growth is coming from, it's probably not going to be disproportionately from the consumer. We don't see the consumer suffering, at least in the big picture kind of way. You can look at individual groups, but we don't see that increased consumption is going to be responsible for what looks to be a pretty strong year of economic growth.
Feroli over at JP Morgan, he goes to no rate cuts 26. Where are you at Nomura?
We're 2 rate cuts this year, both post Powell. So we realized we were probably more hawkish than the street for a while. Some people have leapfrogged us, but we have not changed our view.
Well, can you make some? I got 12 seconds. Can you make some news here this morning and give us an emergent shift?
Afraid not, but it is all about politics at this point. It's not based on economic fundamentals. Right. It's new Fed chair comes in, more dovish Fed chair, 2 more cuts come from that.
It's far too commonsensical. David Seif, love having him in here, Chief Economist, Developed Markets at Nomura. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Ran into somebody in the street. They said, we only listen for the newspapers.
Oh, my God.
Joining us now, Lisa. How are the Oreos from Costco? What size do they come in?
Just to be clear, I posted a picture on Twitter about my Costco cart. And in the background on the shelf were Oreo cookies. Tom thought they were in my cart.
No, we know you, and they're not in your cart.
Gotta love it. All right, here we go. Here's a question for you. What do you wear when you go on a flight? Do you go comfortable, casual?
That's a big deal.
Do you go in the bow tie and suit?
No, I go in the bow tie, pounded into me by my grandfather. You dress up, they treat you totally different. I once got upgraded to first class on British Airways because I was wearing a stupid bow tie.
Really?
Yeah, they got a bunch of muckety mucks there.
I'm going to wear a bow tie then.
$30,000.
Well, the problem is a lot of people don't think the way that you do and you were raised. They go in pajamas, okay, and slippers. The Wall Street Journal actually says that the government thinks onboard behavior will improve if people dress more appropriately.
I think there's something to that.
Maybe if they didn't pack them like cattle. Seriously.
Yes.
I can't even sit in the chair in economy.
Like, you have to be comfortable. And especially if you're the overnight flights, especially with kids. Oh, goodness.
I'll never forget, though, my first international flight years ago, I got all dressed up to go to Greece, and I wore linen pants and a big wide-rimmed hat. I don't know where I was coming from or what decade I thought I was living in, but I looked like a hot mess when I got off the plane 10 hours later.
Yeah, you were a wrinkled mess. Yeah. I know, but it's interesting. The article goes into what Tom was talking about. Is kind of the history behind it, like how people dress in the 50s and 60s and how it kind of changed in the 70s, when kind of things were deregulated on airlines. So it's a good history lesson.
Ed Bastian with us later with Delta, I believe with Jonathan Farrell.
Yes.
We got to move on. As simple as I can. The airlines have no one to blame but themselves.
Oh, there you go. Okay, this one we've been talking about stories about America facing a shortage of skilled tradespeople. We've been hearing a lot of stories about this. So Business Insider says Ford, they're so desperate for mechanics that they're giving some of them free tools and merch. It's a partnership with Carhartt, so they're going to give them free tools, and which is big because mechanics have to buy them, and they cost thousands of dollars, these toolkits. So this is a huge part. It's a partnership program that they're talking about. And those are some of the things that they're going to be doing.
They have to give incentives to get these people to take the jobs.
Give them World Cup tickets. They're $20,000 for 2 seats. Next.
Okay, so yesterday, Fed Chair Jay Powell, he delivered, that 2-minute recorded message response to the DOJ issuing those subpoenas. Well, the video made its way to The Daily Show with Jon Stewart, and he focused on how Powell kept licking his lips, right? So he said, somebody get this guy a glass of water. And then he geared up for this joke that he was talking about it. He was like, all right, I got this joke. Are you guys going to be with me? Hang with me. And he was shouting out a certain morning radio business program. Take a listen.
So anyone who doesn't listen to Bloomberg Surveillance in the morning, you can just leave the room. I'll wait. Okay. Wow. That dude, he's struggling. It appears the chairman of the Federal Reserve is having a liquidity crisis.
Jon Stewart. I look at this, Lisa, and thanks to Mr. Stewart for his attention to the program. You should realize that this guy, he loves to play dumb. Ready? Chemistry, William and Mary.
Wow.
This guy did not. Most comedians like to sort of waltz through school or, they got a trust fund or whatever. This is not Jon Stewart.
No.
Chemistry, William and Mary.
That's crazy.
It's crazy.
I think Paul Sweeney has some connection to him somehow. I feel like he does. Yeah,
anyways,
he goes to high school.
He's talking there about it in the liquidity to make, to bring it back to actually, which is a very important point. Is Japan the liquidity event right now? Because Ira Jersey says, Mr. Stewart's wrong. There isn't a liquidity event with Jerome Powell. He probably needs some Tito's and Tang. Right? but the answer, Lisa, is I'm watching Japan.
Yeah.
I'm wondering if, seriously, that's going to be Jerome Powell's liquidity event.
Snap elections are coming. You know it.
They are.
She's going to get her.
Month.
Yeah. She's going to go to the polls.
Okay.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.